What if I told you that your money in the bank isn't safe as you think? Is it? Recent events have shaken depositors' confidence, and today we are talking about something that could impact your entire financial journey. What happens when bank fails? And more importantly, how to protect yourself while you are on a path of debt freedom. Hello, debt warriors. Welcome back to our channel. I am your Mahesh Kathiravan, your debt freedom coach. And if you're new here, we help people break free from chains of debt and build true financial security. Recent development in the banks, particularly with the in-depth in-bank situation, have left many depositors worried about their money safety. But here is what the mainstream media won't tell you. Isn't about just banking, it's about your entire financial foundation. Today's video has three critical purposes. The first, I want to educate you about deposit insurance and what really happens when bank fails, because financial literacy is the first line of defense against your debt. Second, I will show you how banking instability can actually trap you more deeper in debt if you're not prepared. And third, I will give you an actionable strategy to protect your money while you are paying off debt and building wealth. By end of this video, you will have a clear roadmap to safeguard your finances no matter what happens in the banking sector. Now, the reality check. Let's start with some hard truths. According to recent data from the RBI, while most deposits are protected under the DICGC, that is Deposit Insurance and Credit Guarantee Corporation, there are gaps that would leave you vulnerable. Here is one of the newspaper article revealed only 97.8% of accounts are fully protected. That means 2.2% of accounts have partial protection. Most shockingly, only 56.9% of total deposit value is fully protected. This means 43% of one deposit have limited coverage. If you're finding this information eye-opening, make sure to check out our financial planning checklist. It will be there in up or down. I will also put in the link in the description. We deep dive into protecting assets while eliminating debt. Now, what this means for debt freedom seekers? How do you get out of the debt? Now, if you are on a debt freedom journey, this should concern you for three reasons. The first reason is emergency fund vulnerability. Your emergency fund, which is crucial for 3 to 6 months of expenses, we always talk about as a term rule, might not be as secure as you think. Because if you have saved 10 lakh rupees for your emergency fund and your bank fails, you might have only 5 lakh rupees back as immediately. Reason number two, debt payoff strategy disruption. Imagine you have saved 2 lakh rupees for a final debt payoff, and suddenly that money is tied up in a bank failure. You could be forced back into debt just to survive. How many of you have like this kind of moment in your life? Type like this in the comment box. Thank you. Thank you so much. Reason number three, wealth building setback. Every month you delay wealth building, cost you compound interest, right? So a bank failure would set you back years in your financial journey. Now, the DIG system protection. How does deposit insurance actually work? Let me break down in DIG in the simple terms. The coverage amount up to 5 lakhs per depositor per bank. What is covered is savings account, current account, fixed deposit, recurring deposit. What's not covered? Cooperative banks in some cases and interbank deposits. But here is the critical part. People most miss that is a 5 lakhs per bank, not per account. Now there is a trick. So if you have multiple accounts in the same bank, you will only cover for 5 lakhs. And also it doesn't include your lockers as well. Now this article also mentions that the claim settlements have improved with 432 crores of 1,432 crores of rupees have been settled in 2023-24. But here's what they don't tell you. The average time to get your money back can be several months to a year. And that's the reality. Because still we have a lot of depositors in a lot of banks that have not got their money back. Right? So can you afford to wait that long when you're trying to get out of the debt? If no, type no in the chat box. Right. Now, what I will be sharing you the three strategies of debt freedom protection strategies. Okay, the strategy number one, the multi-bank approach. Never keep more than 4 lakhs in your any bank. Now, how to structure it, I will tell you. Bank 1, 4 lakhs, emergency fund part 1, 4 lakhs, another 4 lakhs, part 2, and another 4 lakhs debt payoff fund in bank 3. So this gives you 12 lakhs of protected money across all the three institutions. Now, it doesn't mean that you need to maintain 4 lakhs. It can be less than also if you're not able to maintain your emergency fund. That's okay, but not more than 4. Strategy number 2, diversify asset protection. Don't put all your eggs in the banking basket. So what I mean, 40% in banking deposits spread over multiple banks. So not in one bank, multiple deposits, multiple banks, multiple deposits. If you are able to maintain, or if your financial advisor or chartered accountant can maintain that. 30% in liquid mutual funds, 20% gold ETF or physical gold, 10% in cash at home. Yes, physical cash is important right now also for true emergencies. This diversification strategy sometimes we have covered extensively in the financial planning playlist also, where I have been uh, real clients I have evaluated their financials. So I recommend watching those videos. After this, you will get the complete picture of asset protection. Strategy number 3, the debt freedom insurance plan. Create what I call as financial failure buffer. What is that? You have to maintain 50,000 rupees in cash at home. Now, it can be more, it can be less, depending upon your inflation, whatever, your groceries and everything. Keep 1 month of debt payments in a separate bank. Have a credit line available but unused for true emergencies. So it can be with your credit card, it can be with your anyone where you feel that this credit line can be used. So this will protect your debt freedom journey even if your primary bank fails. This is exactly a lot of people are not following this and they can fall trap to the bank fail. Now, let me tell you of my one of the client story. I just don't share that real kind name. He's one of the coaching clients, and he had around 8 lakh rupees saved for the debt payoff, all in one bank. So when rumors started about the bank stability, he panicked. What he did is immediately we removed 4 lakhs to another bank. 2 lakhs we put in the liquid fund and keep 2 lakhs in the original bank and use 4 lakhs to immediately pay off the high interest debt. Now, this was luckily because he came to know a lot before than the many other poor investors who have already failed. So result is what? Even if his original bank would have failed, his debt journey would not be interrupted. It would have been continued uninterrupted. Now, here's a very something powerful. When you protect your money properly, you sleep better. And when you sleep better, what happens? You make better financial decisions. And when you make better decisions, you get out of debt easily. I've seen clients save up 12 to 8 months from their debt freedom journey just by having this peace of mind. Okay. So this is what the whole thing is all about. Now, warning signals, the red flags to monitor. Okay. Monitor these warning signals in your bank. Frequent management changes, that means the bank is somewhat unstable. Remove your money, do the water strategy, what I told you in the previous section. Unusual restrictions on withdrawals, it might be there. You just see. Negative news coverage, immediately act upon. Rating downgrades by agencies, that also can be a indicator for you to look upon this thing. So if you spot this red flag, don't panic, okay, but act quickly. Take your financial advisors, help professional financial advisor, professional like us, and just make it happen. Start moving bank money for the safer bank. Document all transactions. Inform your coach, debt freedom coach, or financial advisor. Adjust your debt payoff strategy if needed. So if anything is high interest is urgently there, pay off that money. Don't worry about what is there in the bank, because ultimately bank will always fail and your money will go. So don't make that. Okay. So let's recap these 3 critical points. Diversification is protection. Never keep all your money in one bank. Speed matters in banking crisis. The first to act often fares better. That's my client story. Third, debt freedom first. Sometimes better to pay off debt immediately than risk losing money in a bank failure. Okay. Now, what is your next step? So what I want to do you right now, check how much money you have in bank. Don't share me in the comment box. You check how much money you have in each bank. If any bank has more than 4 lakhs, let's make a plan to diversify. Create your financial freedom buffer. And the fourth is revise your debt payoff strategy with this protection in mind. And if you want personalized help with your debt freedom journey, including asset protection strategies tailored to your situation, I invite you to book a debt freedom discovery call with me. In this 30-minute session, we will analyze your complete financial picture, create a custom roadmap to your debt freedom that protects you from the banking instability. Okay. The link in the description below. Spots are limited, so personally I handle each transaction. Remember, debt freedom isn't about paying off what you owe. It's about building a financial fortress that can withstand any storm, including the banking field. If this video helped you, please give a thumbs up and subscribe for more freedom strategies. A quick disclaimer, I'm not a chartered accountant, I'm not a certified financial professional, I'm a qualified personal finance professional. I help, and this video is only to educate you, not to make the financial decision. So please take your financial decisions before consulting your professional financial advisor. And don't forget to watch our complete financial planning list for more asset protection strategies. Hit the notification bell so that you never miss out our weekly content. And remember, you got this. Your debt freedom journey is worth protecting. I will see you in the next video. Debt Warriors.